The rise of the 1099K. What you need to know: the 1099K form has been a topic of discussion among gig economy workers, freelancers, and small business owners in recent years. With the increasing use of third-party payment services, the IRS has introduced this new form to track and report payments made through these platforms. What is the 1099K form? The 1099K form is a tax document that reports payments made through third-party payment services, such as PayPal, Venmo, or Cash App. It is issued by the payment service provider to recipients who have earned $5,000 or more in a calendar year. Asterisk key characteristics. Reports payments made through third-party payment services issued by payment service providers to recipients who have earned $5,000 or more. Used to track and report payments made through these platforms. Who receives the 1099K form? The form is used to report income earned from these platforms, such as PayPal, Venmo, and Stripe. What is a 1099K form? The 1099K form is a tax form that reports income earned from third-party payment networks. It is used to track and report income earned by freelancers and small business owners who use these platforms to receive payments. The form is issued by the IRS and is used to ensure that individuals and businesses comply with tax laws and regulations. This change was made to help the IRS track and tax income from online transactions. The rise of third-party payment platforms. The rise of third-party payment platforms has revolutionized the way we make and receive payments. These platforms have made it easier for individuals and businesses to send and receive money, and have opened up new opportunities for online transactions. This can be confusing, but it's essential to understand the difference between these forms and how they impact your tax situation. Understanding the basics of 1099 forms. As a freelancer or independent contractor, you'll likely receive one or more 1099 forms from clients or companies you've worked with. These forms are used to report income earned from these engagements. There are several types of 1099 forms, but the most common ones are 1099 MISC. This form is used to report miscellaneous income, such as freelance work, consulting, or other non-employee compensation. 1099K. This form is used to report payment card and third-party network transactions, such as credit card payments or online transactions. Don't let accurate income reporting slip through the cracks. Understanding the importance of accurate income reporting. Inaccurate income reporting can have far-reaching consequences, affecting not only your tax refund but also your eligibility for various tax credits and benefits. It's essential to ensure that you report your income accurately to avoid any potential issues. The consequences of inaccurate income reporting: double reporting income, underreporting income, missing out on tax credits and benefits, increased tax liability. The risks of accidental double reporting. Even professional tax preparers can make mistakes. For instance, a tax preparer might accidentally enter both income sources, resulting in double reporting. This can lead to a significant impact on your refund, how much you owe, or your eligibility for various tax credits. Example: accidental double reporting. Suppose you have two jobs, one paying $50,000 per year and the other paying $30,000 per year. If your tax preparer accidentally enters both income sources, you might end up reporting $80,000 in income, when in fact, your total income is only $80,000. The importance of double-checking to avoid accidental double reporting. It's crucial to double-check your income with your tax preparer. Understanding the 1099K form. The 1099K form is a tax document used to report payment card and third-party network transactions. It's a crucial form for individuals and businesses to understand, especially those involved in e-commerce, online sales, and digital payments. What is the 1099K form used for? The IRS will not send you a refund if you report too much income. Understanding the consequences of underreporting income. When it comes to reporting income, the IRS has specific rules and guidelines that must be followed. One of the most critical aspects of income reporting is accurately reflecting the amount of income earned. Underreporting income can have severe consequences, including loss of refund eligibility. if you underreport your income, you may not be eligible for a refund. The IRS will only issue a refund if you have paid more taxes than you owe. Increased audit risk. Underreporting income can increase your risk of being audited by the IRS. The IRS may suspect that you are not reporting all of your income, and may conduct an audit to verify your income. Penalties and fines. If you are found to have underreported your income, you may be subject to penalties and fines. This is because Schedule C is the standard form for reporting business income and expenses for freelancers, gig workers, and independent contractors. Understanding Schedule C. What is Schedule C? Schedule C is a tax form used by the Internal Revenue Service, IRS, to report business income and expenses for freelancers, gig workers, and independent contractors. It is a crucial document that helps these individuals accurately report their income and expenses to the IRS. You will need to deduct the fees and expenses from the gross total to get the net payment amount. Understanding the 1099-K form. The 1099-K form is a tax document used by the Internal Revenue Service, IRS, to report payment card and third-party network transactions. It is issued to individuals and businesses that have received payments from third-party networks, such as credit card companies, online payment processors, and digital wallets. What is a 1099-K form? Understanding the 1099-K form. The 1099-K form is a tax document used to report payment card and third-party network transactions. It is issued by the Internal Revenue Service, IRS, to individuals and businesses that have received payments through these networks. What is a 1099-K form? The 1099-K form is a tax document that reports payment card and third-party network transactions. It is used to track and report payments made through these networks, such as credit card transactions, PayPal payments, and Venmo transactions. ####. Who receives a 1099-K form? The 1099-K form is typically issued to individuals and businesses that have received payments through payment card and third-party network transactions. Most tax preparation software, including TurboTax and H&R Block, can generate a 1099-K form for you. Understanding the 1099-K form. The 1099-K form is a tax document used to report payment card and third-party network transactions. It is issued by the IRS to individuals and businesses that have received payments from third-party networks, such as credit card companies, PayPal, and other online payment processors. What is a 1099-K form? The 1099-K form is used to report payment card and third-party network transactions, including credit card payments, PayPal payments, online payment processor payments, other third-party network transactions. Who receives a 1099-K form? Double-check your tax return to avoid penalties and ensure accuracy. Understanding the importance of double-checking your tax return. When it comes to filing your tax return, it's easy to overlook a crucial step: double-checking your return for accuracy. A single mistake can lead to a significant amount of money being owed to the IRS, or worse, a refund being denied. In this article, we'll explore the importance of double-checking your tax return and provide tips on how to do it correctly. Why double-checking is crucial. Avoids penalties and interest. If you underpay the IRS, they will reach out to you to collect the owed amount. However, if you overpay, the IRS won't be able to flag the excess amount, and you might not even notice it's missing. Ensures accuracy. Double-checking your tax return helps you catch errors and discrepancies that could lead to incorrect refunds or penalties. Reduces stress. A double-checked tax return can give you peace of mind, knowing that you've done everything correctly. #tips for double-checking your tax return. *** Tips for double-checking your tax return. Step 1. Review your W-2s and 1099s. Verify the income reported on your W-2s and 1099s matches the income you reported on your tax return. Check for any errors or discrepancies in the income amounts. ## Step 2. Review your deductions and credits. Step 2. Review your deductions and credits. Ensure you've claimed all eligible deductions and credits. Verify that the amounts you've claimed are accurate and match the documentation you have. Step 3. Check for errors in your return. Step 3. Check for errors in your return. Review your tax return for any errors or typos.